Do you work full-time and also trade on the side, but keep wondering why you keep taking unnecessary losses from the market despite having a very solid strategy? Well, in this video, I'm going to break down the 7 most costly mistakes part-time traders like you make, and most importantly, how to avoid them. Now, mistake number 1 is what keeps most part-time traders unprofitable. So make sure you get to know it so that you do not make it anymore. But before we get into that, I am Gani, a day trader now for 5 years, and I'm telling you these same exact mistakes are what kept me unprofitable for so long. It wasn't until I overcame these that I was able to start receiving payouts from prop firms. Now, my number 1 goal on this channel is to help 9 to 5 professionals like you fully transition into full-time trading. And also, if you happen to get some value from this video, please like the video, share it with someone, because trust me, it will help them. So without any further ado, let's get into these 7 costly mistakes. Mistake number 7 on this list is not having a trading routine. Now, this is a very big mistake simply because without a routine, trust me, you cannot succeed as a trader. If you're to become a profitable trader, you must be consistent. You can't be everywhere. Today you're doing this, tomorrow you're doing the other. You cannot afford to do this while you're in the markets. So what I would recommend you do is that in the morning, have some kind of routine. Let's say check on the news for the day. Is there going to be any kind of news for the day? Get to know this very well. Then the other thing you could do, try and choose one session that you know that is very favorable for you. So if you're someone that, let's say, is always at work during the London session, you could probably opt to always trade the New York session, because this is the time you actually have for you to be in the market. So try and always stick to this one session, because you can't be all over. And then obviously the other thing I recommend you do is for you to always review your trades at the end of the week, because this will enable you understand what works and what doesn't work. Because there's a saying that what doesn't get measured doesn't grow. So obviously, if you're not looking at exactly how you've performed, let's say within that particular week, you cannot grow as a trader. So try and always track your trading every single week. Then mistake number 6 is not backtesting your strategy. I've seen so many traders risk their hard-earned money on a strategy they've never actually backtested. Now, in my opinion, I need you to actually go out there in the market and get a good backtesting software. You could use software like maybe TradingView. Try and use such software to actually backtest your trades very well, because if you have, let's say, data of about 100 or more trades, this will actually give you confidence for you to go into the markets when you're confident that actually the strategy you're trading works. So if you have not yet backtested your strategy, please do not try trading it in the live markets. Now, mistake number 5 is trading wrong time frames. I've seen so many traders, especially those that are always busy at work. Many of them think they can actually scalp the market. Now, this is a no. I'm telling you, as someone who is always busy, you can't have a scalping strategy. It's not possible, simply because you are not going to have that time to actually spend on the screen. So in my opinion, what I advise you do is actually go out there, find a strategy that fits within maybe a 4-hour time frame or the daily time frame, because you're not always going to be in the markets, watching price. That within a 4-hour candle, you're able to actually, maybe come check on maybe during your break. And then once you see that your setup hasn't formed, you can go back and do your work. So do not try and go for, smaller time frames like maybe the 5-minute time frame or the 1-hour time frame, because these are not good for you. You will not be able to concentrate on your work and as well trade. So try and find a good time frame like the 4-hour time frame or the daily time frame, this is how you're actually going to be able to win as someone who actually has a full-time job. So within this time, you could look at market opening hours, like maybe when the London session is opening, or maybe that overlap of the London session and the New York session. So these are the times you could look at, simply because the market volume at these hours is so high. So you could use these times to actually make your entries into the market for you to have a very frictionless kind of trading. So this is my advice to you. Please try and find a time frame that actually suits your kind of work that you do as a full-time worker. Then mistake number 4 is letting your emotions control your trading. So many times I see people, being engulfed in maybe greed or maybe fear or even revenge trading. They let all these emotions actually take control of their trading instead of themselves being in control. So to fix this, you need to always follow your plan. I'm telling you, try and always follow your plan. Have a checklist that maybe A, B, C, D must all be met for me to actually enter that particular trade. So have a plan and always stick to your plan. Then obviously I also recommend you actually take a break. Every time you take a loss in the market, take a break. First, walk away, go somewhere. By the time you come back, trust me, your emotions will be normal again and you'll be able to move on with your day. So you do not have to always revenge trade to try and make back what you've just lost from the market. So take this advice and trust me, it is going to help you as a trader. And then of course, I also advise you use automations. As you are trading, try and use maybe price alerts, or maybe use stop losses, use take profits, because these will enable you to take the emotions out of your trades. You'll be able to, set and forget. You put on a trade and you have your stop loss on or you take profit on, and you don't have to worry about anything. Then mistake number 3 is ignoring your risk management. Some traders think that particular trade they are putting on is what is maybe going to make them rich, and trust me, it always ends up not working out, simply because if you, let's say, risk 20 or 50% of your total account, you're obviously just 2 or 3 steps away from blowing your account. So you do not want to be this type of trader, because when you're a trader, your number 1 goal in the market should be to protect your capital. You need to protect and preserve your capital as much as you can. So I highly advise you actually don't risk more than 1% of your account. If it's even possible, go for a 0.5% of your account, because this is going to keep you in the game for a very long time. And then the other thing I recommend is for you to have a 1 to 3 risk to reward ratio, because with this kind of risk to reward ratio, even when you take 2 losses in the market, you know that if your next trade actually is a win, you're obviously going to cover back for all these losses you've taken in the market. So you do not have to worry about anything. And then also always use the right lot size for your trades. If it's, let's say, someone trading Forex, always use lot size calculators. There are so many out there. Like, for example, there's one on my FX book. You could go ahead and use this to actually calculate your lot size based on your account size. So try and always use this before you actually even enter your trades. Then mistake number 2 is over trading. I've seen so many traders that actually work full time. They think they can always be putting on trades. And trust me, this is surefire for disaster, because you are actually trying to run down your account, because this is obviously always not going to end well for you. You do not have to overtrade. You don't have to look at everything as an opportunity in the market to actually take a trade. Some traders, when they see, let's say, double bottom, they want to enter, let me go long there. You do not have to take every trade. Only take quality setups in the market. Do not go for quantity but quality. Always take quality setups in the markets. Only go for those A setups, and trust me, this is what is going to make you a profitable trader. Then the other thing I would recommend you do is actually limit the number of trades you take every single week. Now, for many traders, based on their strategies, for some traders, maybe the market can only give them maybe 2 setups a week, and that's very okay. Do not think you must be out there in the market all the time. When it comes to trading, less is always more. I'm telling you, the less you're out there in the markets, the more money you're actually going to make, simply because when you are in the market all the time, you are actually trying to expose your capital or expose your account to the market. So you do not have to always be out there. Try and protect your capital as much as you can by not over trading. Then mistake number 1, which is the most common mistake I've seen, and actually this is what leads to many traders not becoming profitable, is trading without a plan. Some traders, they trade based off of their emotions. If they feel like, because of maybe impulse or something like that, if they feel they need to enter at that particular moment, maybe they've seen price is showing good volume, it's going to move up, they enter right there. For many of them, they go ahead and enter, and trust me, price always comes back and takes them out. So you do not want to be this type of trader. Have clear set rules on how you're going to enter, how you're going to exit that trade in case maybe the trade goes against you, or maybe even how you're going to take your profits from the market. So you need to have all this already planned out before you actually even enter that particular trade. And then of course, you also need to use a trading journal, because with a trading journal, you'll be able to, write down exactly how you're feeling in terms of emotions, and then also write down the trades you've taken. Let's say if you have taken, let's say, losses in the market, you need to write this down. If you've won from the markets, you also need to put this down. This will enable you base your decisions for the future on this particular trading journal that you already have with you, because trust me, if you do not have past history, there's no way you're going to actually know exactly what to do in the future when it comes to these markets. And then of course, you also must stick to a particular strategy. Get a strategy out there and then commit to that strategy, because for all the pro traders you see out there, they actually stick to one strategy, and this is the secret to actually becoming a profitable trader. Do not trade this strategy today and then tomorrow you change to another strategy. It doesn't work that way. You must commit to one strategy, and this is how you're going to become profitable. Now, these are the 7 costly mistakes that hold back most traders, and now that you already know them, it is time to take action. Now, I would like you to let me know, what is your biggest struggle in your trading? Let me know in the comments. And in case you're someone who takes advice from other traders, I would like you to stay away from this type of advice.